What's going on, guys? It's Investing Hustler, and I'm here with Aaron from Departures Capital. How's it going, Aaron?
Oh, it's going great. How are you doing?
I'm doing good. It's been a while since I did a collab, but I'm here. You brought me back,
Yep.
so we got a few articles today, and it's you guys aren't gonna like them, but let's get to it. So the first article we're about to read is 3 marijuana stocks I would avoid at all costs. And you guys are going to be surprised when you hear some of these companies. And this is, of course, by the Motley Fool.
Your
So
favorite stock analysis company.
I hate them now. Just kidding. Well, before we get started, I would like to ask you guys to please give me a like. It really helps my channel and it will push me to make more videos. So let's try to get this video to 100 likes. And before we talk about those three companies, we're going to review them real quick. So one of those companies is Aurora Cannabis. So right now, Aurora Cannabis is negative 4.94% on the day, and they've reached a low of $6.50 today. If you look at their 52-week range, Aurora is pretty close to their 52-week range. We're going to read an article talking about how Aurora is currently a bad investment. Although some people may agree or disagree with this statement, it's simply an article. So we're just going to review them. Right now, Aurora has been on a nice downfall. They went from a high of $16 and now they're sitting at about $6.55. I did make a video where I said Aurora can potentially go all the way back down to $5.50. And right now, that's honestly looking like a possibility. So you're looking at Aurora, they still have a market cap of 6.86 billion, which compared to their 30 million gross revenue from the last quarter, it still puts Aurora at an overvalued price. So their P ratio is 29.16, and that's not too bad. It's not the greatest P ratio, but it's not too bad. Aurora is a growth stock. Let's move on to the next company. The next company we'll be talking about is Cronos, and Cronos is currently sitting at $14.30. They did have a nice little run up after that Aphria deal, which they went up all the way to $18.24. And they have been downtrending ever since. Cronos doesn't have a PE ratio because they're not profitable yet. They do have a market cap of 2.675 billion. I would say that is way overvalued, especially for a company that hasn't profited last quarter. They're pretty much sitting on that market cap because of the investment from that Aphria deal. And then the next company we're going to talk about is Aphria. Now Aphria is sitting at $6.72, and they had a major downfall ever since they got shorted and attacked. Well, I've made a video about that. If you guys want to see that video, you can click on the top right corner. It's diving deep into Aphria, why Aphria crashed, and they slightly recovered. Aphria did go as low as $4.78. They did hit a high of $8.77, and they found like a middle ground. They do seem to have a nice little resistance right around here at $6.85. Right now they are below that resistance, so we'll see if they bounce back up. They do have a market cap of 1.75 billion. I do find it kind of funny that Cronos now has a higher market cap than Aphria. They have a P ratio of 37.67. We're going to get into this article. I'm just going to warn you guys that it's not a very positive article. So if you guys want to hear something positive about these three companies, I would suggest skipping this video because it's not a very positive article. Anyways, let's get right into the video. So the global market for legal cannabis sales is expected to grow like a weed in the years ahead, which could help these 5 marijuana stocks produce market-beating gains for investors. If you feel like now's the time to start investing in these stocks, though understanding a few key reasons to avoid them could save you a lot of trouble down the road. Aggressive growth strategies generally make sense when companies are jostling for shares of rapidly expanding markets. The pursuit of growth at all costs has come at a tremendous expense that these companies could have trouble paying. Here are a few big problems that could keep these marijuana stocks from performing for your portfolio in the years ahead. Stock dilution. Investors who bought Aurora Cannabis stock a couple years ahead of Canada's adult use rollout have seen this Canadian pot producer overall market cap explode 1,280% higher. Sadly, Aurora has made so many purchases with its own shares that investors realize a far more modest gain, and the long-term Aphria investors are in a similar pickle jar. Looking ahead, Cronos is about to receive a 1.8 billion cash injection from Altria in return for 146.2 million new shares of Cronos stock. That's enough to boost the number of outstanding shares a whopping 81% higher, which will make it a lot harder for a long-term investor to realize a decent return on their risky investment. Aurora Cannabis, Cronos, and Aphria are spending heaps to expand operations abroad, but investors are expecting a majority of sales to come from their domestic market in the years ahead. Despite finishing September with a strong balance sheet, Aurora's sales haven't kept up with rapidly expanding operating expenses. That means investors can expect another value-diluting share offering if legal Canadian marijuana sales don't perform as well as they have in the U.S., the states that legalized adult use sales years ago. So you could go on the next.
Okay. Central planning versus free market economics. In the U.S., state governments don't set wholesale prices that producers can offer at dispensaries, but that's the plan in Canada. Centrally planned markets don't have a terrific track record, and these producers could have a hard time moving half the cannabis they'll be capable of growing in another year. Many U.S. investors fail to appreciate just how freely Canada's illicit marijuana market is running these days. In 2017, just 18,637 of Canadians were charged with pot-related offenses compared with 10,327 marijuana charges that hit Colorado courts in 2012. So that's the state of Colorado alone. In other words, U.S. citizens in Colorado were 4 times more likely than Canadians to be charged with marijuana-related crime during the year cannabis became legal in their respective homes. Following the legalization of possession, Canadian authorities are even more hesitant to pour limited resources into chasing marijuana-related lawbreakers. Unfortunately for these producers, there could be a lot of them.
So the next part, they call it weed for a reason. So Aurora thinks it's a high-tech Aurora Sky facility can reduce the cash cost of producing cannabis to below $1 per gram next year. That could make it the lowest cost producer in the country, but it's important to remember why it's called weed in the first place. Experience, a spare room, and a couple thousand Canadian dollars worth of readily available equipment are all a hobbyist needs to grow a few kilograms of top quality cannabis annually. Unless Canada also raises its relatively cheap residential electricity rates, neighborhood entrepreneurs with spare time will be happy to undercut licensed dispensaries, which is true.
Yep, exactly. I mean, a lot of my friends, they don't buy it from OCS. They still buy it from whoever their local guy is, because it's just they don't want to spend that much more.
Yeah, now that it's legal to grow marijuana in your own house, I think you're allowed to have 4 or 5 pot plants.
Yeah, exactly.
People might start doing it or might get curious, and I might even do it. Why not? It's legal.
Yeah, if it's legal, I don't know. That'd be kind of cool to have one just growing there.
Yeah, I've never.
I mean, I want to do it too.
Yeah, exactly. Just as
Why not?
experiment. What if you get good at it? So that is
Exactly.
the point.
Poor track record. There's a chance that the Canadian government will effectively monitor real prices on the ground, so licensed dispensaries, and in turn, these 3 producers have a fighting chance. Sadly, a look at the country's 17-year-old marijuana program does not inspire confidence. In Canada, the number of medical patients didn't reach 200,000 until 2017, which worked out to around 0.5% of the population. For comparison, consider the state of Michigan, which legalized medical marijuana about 7 years after Canada. At the end of fiscal 2016, around 2.2% of Michigan residents had their medical marijuana license, despite federal laws that say they're all criminals.
Another one, not worth the risk. So Aphria Inc. is the most reasonably priced stock among these 3. And it's still a $1.2 billion company that recorded just $34 million in sales over the past year. Aurora Cannabis has been trading at 51 times total revenue over the past year, and Cronos Group shares trade at a whopping 217 times trailing sales.
Wow.
Which is why I sold all my shares. So it's hard to imagine legal marijuana sales during Canada first couple of years will outshine California's performance. But investors buying these stocks at a recent prices will almost certainly suffer losses if that doesn't happen. That makes these stocks one to avoid now.
That's like a super bearish statement.
Super negative. Usually they're very positive, but this one was very, very negative. But they did make good points, especially with what they call it weed for a reason. Anyone can grow it in their own home. Literally, all you need is a little bit of light bulbs, seeds, some dirt and water, and you're good to go. I'm sure it's more complicated than that, but
yeah.
So what do you think about that article? Aaron? We should ask Joe what he thinks.
I know, right? It's all you do is ask me what
What do you think, Aaron? I don't know. I think it was pretty scary. It's not looking good. Everything's looking red. If we're looking at
but yeah,
the
I don't know. I think it was perfectly timed with this whole downturn in the stock market. Like, why not just add to the bearish sentiment? It's just like when everybody gets bearish about the market, it's almost like everybody just jumps on that bearish ship down, right? These companies they've been way lower. I mean, sorry, they've been way higher. Not that that means that they're going to get back up there, but there's so many oversold sectors right now. But it could get worse for sure. ACB could go back down to $5.
Well, overall, it was a red day in the market, so it's not like it's just the marijuana sector.
Yeah.
Holy Cali went down 32.35 today.
Holy.
Cali got beat up. Almost everything's red. Only a few companies. Huge went up. MYM went up.
Let's take a look at Tilray real quick. So anyways, in regards to that article, I mean, it's easy to be bearish when the market's tanking. So I still hold some cannabis stocks. So, I mean.
Yeah, I'm definitely still holding on to some stocks. I just bought some Aurora the other day because I sold all my shares. So I'm like starting all over again with Aurora.
Yeah.
And I've been buying and it's been going down. So it feels like I'm having deja vu.
Yeah.
It's happened before. I don't know if you wanted to read this one since we're talking about Tilray. Tilray did go up today 10%. They went up $7. I was tempted to buy in the 60s, but of course I didn't because I thought it would go to the 50s. But yeah, Tilray has always been a nice swing trade company. And the reason why Tilray went up today is it's explained right here. Tilray jumps 10%. Hold on AB InBev partnership. Let's see. There's a video here too. I don't know if you guys want to watch this. Let's check it out.
Let's see what we got here. Santa Claus rally.
It has a lot of funny little traditions and descriptions for things that generally happen on a quasi-regular basis over a long period of time. The Santa Claus rally is one of them. And it effectively talks about the fact that stocks tend to have a greater than expected rise in the final trading days between Christmas and New Year and the first 2 days of the following year. Now, technical analysts will point to all sorts of indications why portfolio managers may be tinkering with the stocks that they have under management. Money's flowing in, money's flowing out, and it tends to create a window dressing effect, if you will, that lifts markets as people position themselves into next year. Now, the Santa Claus rally generally is a good omen of what is likely to happen into 2019. You want to, if you are bullish about stocks next year, you want to position yourself.
This guy's still talking about the Santa Claus rally.
Momentum.
Yeah.
If you're bearish going into rally, chances of the Santa Claus rally are pretty low. So actually it can be an interesting, it's not a precise and it's certainly not an infallible predictor of 2019, but it's one that people do pay attention to. And as such, it's a momentum trade that's always worth watching. It's always a bit of fun as well.
But when does it take place?
It takes place in the days immediately after Christmas and in the first 2 trading days of the new year. That's generally when the technical analysts
So this whole time we thought the Santa Claus rally was supposed to start now, but he's saying it's supposed to take place after Christmas.
Yeah, he's saying Santa Claus comes like right around Christmas or what?
He's saying the day after Christmas, 2 days, and then the couple days in the New Year's.
Apportion their charts to what they call the Santa Claus.
Which I wouldn't be surprised now that the stocks are getting beat up so bad.
Yep.
We might just get a Santa Claus rally, but a lot of people who are holding shares right now, they're not going to see gains because their stocks got beat up so much. Who knows how much it's going to go up. But yeah, I guess we can get started with this article. Shares of Canadian cannabis company Tilray rose more than 10% Thursday after the company announced a products research deal with Budweiser parent AB InBev, BUD, one of the world's largest brewers. So Tilray shares shot up $7.30 or 10.3% to close at $78.30 on the day when Dow Industrials fell 2%. That's a big reversal for Tilray from Wednesday when the stock tumbled 7% to 71 amid a broad market sell-off after the Federal Reserve raised interest rates. However, AB InBev shares fell 1.5% to the end of Thursday at $67.78, falling in sympathy with the broader market.
Yeah.
I noticed that when these companies they're investing in the marijuana sector, Like even Constellation Brands, when they invested into Canopy, Constellation Brands went down and then Canopy went up. And then Altria, when they invested into Cronos, Altria went down and Cronos went up. And then the same thing's happening with Bud. So
Yeah, it's like whenever they start to spend money, they start to go down, I guess. Like whenever they make a big acquisition, I've found that this parent company usually goes down.
all right, I guess you could read this last part if you want, because it's actually here. I'll read this paragraph and you can read the next one. So Tilray and AB InBev's new research partnership will explore non-alcoholic beverages that contain THC and CBD, both key chemicals found in marijuana, but with very different purposes. THC is a psychoactive chemical in the marijuana that produces the high, while CBD is a non-psychoactive and blocks the high. As part of the deal, each company will pitch in $50 million, with Tilray taking part through its subsidiary High Park Co., which develops, distributes, and sells cannabis products in Canada. And you could take it up from here. So we are.
Alrighty. We are delighted to be joining forces with a world-leading beverage company, AB InBev, to research how to create enjoyable cannabis beverage products. Tilray CEO Brendan Kennedy said in a press release announcing the deal. Kyle Norrington of AB InBev's Labatt Breweries, which will oversee Bud's part of the venture, added that we intend to develop a deeper understanding of non-alcoholic beverages containing THC and CBD that will guide the future decisions about potential commercial opportunities. The company said the partnership will be confined to Canada, where marijuana is now legal at the federal level, unlike the U.S. The deal came one day after Tilray announced a separate distribution with Sandoz, the generic pharmaceutical subsidiary of Swiss maker Novartis AG, to sell and distribute medical cannabis products globally. So that's two big positives for Tilray.
Yeah, I'm surprised they only went up. I guess it's good. That's not bad for a red day, so maybe they'll see a lot more gains.
Yeah.
To go up 10% on a red day, I guess you can't really complain.
Mm-hmm.
When Canopy got that Constellation brand deal, but then again, that was pre-legalization. I think they shot up like 20-30%. Who knows? I don't remember the exact number. And even Cronos had a bigger increase when they got.
Yeah, Canopy was up 34 to 38% on the Constellation Brands deal day.
Yeah, exactly. And then, but I guess it's different times now. It's post legalization. It's no longer pre legalization. So
yeah, and the market's crap too. You got to take that into account. Like to be positive or even to be flat on a red day is like,
yeah,
that's like an accomplishment.
Yeah. All right, guys. Well, if you enjoyed this article on Tilray and that negative article on 3 marijuana stocks, I'd avoid at all costs. Let us know what you think, whether you think you should avoid these companies or whether you're still buying. And if you enjoyed this video, don't forget to leave us a thumbs up. Don't forget to hit that notification bell and smash that subscribe button. And we'll see you guys in our next video. Bye-bye.